Welcome to the another session of financial reporting. Last session, we were discussing about the liabilities part. So we have just finished the discussion about operating cycle. We take an example. We talk about current assets. Then we're just discussing the format of a balance sheet. So this was the first block, which we finished the discussion. Let's go to the second part of the balance sheet. This block talks about the current liability. The current liability is that part of assets which are obligations, and it is responsibility of a business to pay back. So these are the payments which organization is supposed to make. So they are liability, and their figures are changing every now and then. They are mostly revenue in nature. The current liabilities are divided into short term and long term. The short term liabilities are trade liabilities, or they are short-term borrowings for working capital adjustments. Then the other liabilities, we have the loans or other activities which we have borrowed for the purpose of my functionality and other things. Then we have something called as non-current assets. Now, what is non-current assets? Non-current assets are those assets which remain fixed for more period, and most of the time it is divided into two types. One, tangible assets, and second is fixed assets. Now, what is intangible assets? The intangible assets are those assets for which the valuation is depend on the reputation or other things. In short, the valuation will be depend on its goodwill or the similar things. So, in case of intangible assets, the goods are valued or the assets are valued based on the price which is in excess of total of assets, other assets minus capital block, or the valuation is done based on Uh, I think there is some issue about the connection. There is a technical issue on my side. So till the connection is restored, let's talk about the intangible assets and other assets. Intangible asset, the first thing is goodwill. Now, what is the goodwill? Goodwill is that sum of money which I have earned through my reputation, and it is essentially outcome of the business which I have carried out for a more period. So, in goodwill, I have to always take care and ensure that the price which I'm charging is appropriate and essentially follows the exact value which is denoted by the differential blocks. So when we talk about the intangible assets, the value and other propositions are equally managed. The fixed asset, we have some common assets like plant and machinery, building, furniture, motor car, uh, and so forth and so on. This, what is a fixed asset? The fixed asset in this case is that assets where the value of these assets is carried out for more than one financial year and the gain is divided between multiple financial years. So the definition of fixed asset is the value of fixed asset is a large, the capital which is involved in fixed asset is more. Now let's understand the actual format of a balance sheet by example of Asian Paints. So I just downloaded a format online balance sheet of Asian Paints. My dear students, please mute your mic. I do understand you're a very busy people, but if you keep your mic on, it will be troubling to other people. So do not keep your mic unmuted. Keep the mic mute. Manoj Atparkar, you are in meeting, so please rename yourself properly. You always keep your name in this manner, which is not welcome. So, my dear students, when we are dealing with the balance sheet, I know that already the balance sheet is known to you. You are well aware about the structure and formats. But even though you are well aware, as part of syllabus, we need to revise our thought process because this balance sheet is crucial when you're writing the financial reporting standards. And the whole your second unit is talking about how to make final accounts. So if you feel tired, you feel bored about how the balance sheet to be written, then my dear students, you're missing the unit number two. Even though you got a knowledge, you have a knowledge about a balance sheet, how to do it, when to do it, but what about the method? So Indian accounting standards, they just simply talks about the method, how I'm going to elaborate the particular things. So after the fixed assets, the intangible assets, what is the thing which is remains on asset side? Anybody? We have covered the fixed asset, current assets, non-current assets. What is one more thing which is always mentioned on asset side? Can anybody tell me the name of that thing? Any guesswork? The other thing which is mentioned on asset side is accumulated loss. This accumulated loss is the initial investments which are made in that firm. So the accumulated loss talks about how the firm is setting off its initial investments. The accumulated loss, as per income tax provisions, is allowed to set off for the consecutive 5 financial years. So, in accounting standard, it is being allowed to set off the loss for 5 years. So, when we talk about a balance sheet, we have a complete structure in books as different, and in practical, it is different. When we talk about the books, we talk about just T form, where assets, liability, and everything is given. But when we talk about the actual format, what the industry is following, in that case, the balance sheet is observed in vertical formats and it is processed and analyzed in vertical format. So the balance sheet of companies is different and the balance sheet of our syllabus is different. So let's discuss the other items of balance sheet. So let me share once again the screen. Now we're done with the balance sheet. Let's talk about the crucial part, shareholder funds. Now, who are the shareholders? Anybody? What is meant by shareholder? Shareholder. are those people who has contributed in capital of the organization. Shareholder is that sum of money.
लाल कलरले हे आहे. तुप्पू शोक फायर आहे हागलात. आता पिवळी कोळी काय जात.
Arjun Koyekar, can you please mute your mic? This is second time you are talking to somebody. So Arjun Koyekar
हॅलो.
and Rishikesh Shonkar, please don't unmute yourself. You are using the abusing word in online session and this is not justified. अर्जुन कोळेकर आणि ऋषिकेश तुम्हाला जे काय बोलायचं असेल तुम्ही ऑफलाईन बोला. जर तुम्हाला सेशन करायचं नसेल तर कंपल्सरी नाहीये. पण कुठल्याही ऑनलाईन सेशन मध्ये तुम्ही माईक अनम्यूट करून जी भाषा वापरताय ती प्रोफेशनल नाहीये. दिस इज लास्ट वॉर्निंग टू युअर साइड. So I was talking about shareholder funds. Shareholders are those people who actually invest in company's capital. These are the people who have contributed the foundation of a company where they have paid the money for the capital. They are the first people who has given the trust, who has issued the confidence over the efficiency and operation of organization, and they have surrendered their consumption and they have purchased the shares which are valued and used for a longer period. So in short, shareholders are considered as true owners of the company. The shareholders are regarded as the people who has funded the capital. These are the people who has given the money as investment. Normally, all the shareholders are considered as owners of company. There are two types of shares in each company. One is equity share and second is preference shares. The equity shares are those shares which are considered as lenders' last resort, and preference shares are those shares which are similar to equity share, but they got preferential rights, preferential ownership benefits compared to the equity shareholders. So equity shares and preference shares, they both are same, but only in case of preference shares, they has a preference in each and every aspect while making decisions, while contribution, while giving the vote, while receiving the dividend, and at the time of liquidity, they have the preference to get repaid more faster. The shareholder fund is divided into the share capital, reserve surplus, and money received against share warrants. Now, share warrants is like a fixed deposit. They are issued as a promissory note where the holder of warrant is having authority to get paid at par when the duration is over. So, suppose they are for 10 years. After 10 years, these warrants can be settled off by just furnishing to the register office and they are able to repay. Whereas reserve and surplus, there are two types. One is the capital reserve and second is general reserve. The capital reserve is that part of sum of money which we have kept from the net profit, and the purpose of this is to use the money for capital investment purpose. Whereas the second reserve, general reserve, we are using for revenue expenditures, and sudden changes in that organization. So shareholder funds, it is divided in three: warrants or debentures or bonds. Second, share capital, and third, reserve and surplus. Then we have the share capital divided into authorized, subscribed, issued, and paid up. Now let me explain this concept. I have started my company where I required 1,000 rupees capital. So the registration of company is with 1,000 rupees. So this is called authorized capital. Out of allowed capital, I'll never collect every capital. What I'll do is, out of authorized capital, I decided to only issue 800 rupees and keep my 200 as pending. The why 200 has to be keep pending? The simple reason, when I'm in need of funds, when I'm required the funds, I can certainly have this as adjustment. So one is authorized and other is the issued capital. Now, in case of issued capital, out of issue, I have option to allow people to pay 800 or pay extra. So if out of 800, the people ready to pay whole, then the whole capital is considered as issued capital. But many times, out of issued capital, 90% part is paid by the people. So we consider here 700. Okay, I'm sorry. I consider 700. And this is called subscribed capital. So I have 1,000 capacity, but I go with the 800. Out of 800, people will buy 700 capital. Out of 700, the people will decide how much they will have. So I have three options. I can issue at discount, I can issue at premium, and I can issue at par. At par means with the same value. Premium means I will add the percentage or number in the value of shares. And at discount means I will give at less price. For example, the price of share is 100 rupees. So if I'm giving at par, I will sell the shares at 100 itself. But if I'm selling at discount, then in such case, I'm going to sell the shares instead of 100, something less than 100. In reverse, when I'm selling the shares at premium, then in such case, when the price of share was 100, I will going to charge something more than 100. But the subscribe capital, when the people are paying back me, they can either pay me 700 or something more than 700. So if it is more than 700, it is issued at premium. If it is less than 700, it is issued at discount. And if the exact 700, it is called issued at par. In case the 700 capital is paid 600 and premium of 200, then the 100 capital is unsubscribed and I have capital of 600 and premium of 200. When in future company want to expand the business, they will first go with unissued capital. So they will ask the people but you people just purchase the 600. So now you can pay me 100 back, and then people will pay. After this also, the company's capital requirement not finished. They will issue the balance 100 here, and this money of 200 they can use for business. Now this 200 capital again become insufficient. Then the out of authorized capital, I have 200 more, which I can issue to the people for their subscription. And this way, without further borrowings from external entities, I can have 400 rupees capital to myself. To just give a clear idea, let me have a different image. This is a ground where I'm authorized to play. So I can play anywhere. Out of authorized play, the allowed limit to the people is this. And this is called as unsubscribed capital. Out of unsubscribed capital, I will allow the certain portion for people to use it. And the portion which people don't use it, it is called as unsubscribed capital. So out of issued portion, the unsubscribed portion is this, and out of subscribed portion, the people will again pay some part. So if I consider the whole region, actually I supposed to get this as portion, but I'm just collecting this as capital. And when I'm near of future, then I first go to the unsubscribed, then I go to the unissued, and then I go to the authorized. So this progression is followed when I want to launch my company's new projects and new methods. You always heard that there is a method called IPO, initial public offerings. This initial public offering is nothing but issuing capital to the public. So it's my decision whether out of 100 rupees I should collect 100 or I should collect 50. So authorized capital is that share capital which is registered and permitted for me to go with. Whereas issued capital is that sum of money which I'm allowing the people to pay or to participate. Whereas subscribed capital is that capital where suppose I issued out of 180, the people are just purchased 50. So the amount of 50 is subscribed capital and the unpaid or non-subscribed is 50. So this way, the share capital is divided into authorized, subscribed, issued, and unsubscribed or not paid. Any doubts in so far? Let's move further. When we are writing the books of accounts, thank you, Ashlesha, for that clearance. When we're writing the books holdings of accounts, it is always we find a disclosure about the shareholding by promoter. Now, who is the promoter? Promoter is the person. Promoter is the person who has promoted who has promoted the company, who has started the business. So promoter is the first person who has actually has origin of organization. Now, why the disclosure of promoter is essential? The simple thing, When we start an organization, it is normally started as a single company. Then we shift it to partnership, private company, public company, and multinational company. But the assets are initially owned by the person who has proposed the idea of business. For example, Bajaj Capital, Tata, General, sorry, Ford, Infosys, Cognizant, everywhere you will find there are the key board of directors. These board of directors are making the key decisions. So while making the key decisions, there is always a question why these people are always highlighted, why no other person is considered as a crucial one, because these peoples are authorized to make the decision instead of others. So when you talk about the Reliance, in Reliance, normally the normally the major shareholding is at one family and followed it the decision making with different shareholders. So the person who is controlling major shares is considered as promoters. He is a founder of that organization. He has promoted the concept of business. For example, for example, in case of Kirloskar Limited, Shantanu Kirloskar was the first person who has put forth the idea of the Kirloskar enterprise. In case of Reliance, Ambani, Dhirubhai Ambani, he is a promoter. He first put forward the idea. Now, can anybody tell me if I want to take over any company, how much percentage of shares I should have? Suppose I want to tomorrow take the Tata Motors, I want to take over the Taj Hotel. What percentage of shares I should have? Then I'll be called as owner. Any guess? Just put in chat box. How much percentage of shares I should have to call as the owner of company?
Anything more than 50%?
No. The idea of 50% we have learned from our book, but actually in practice, the 50% is not the answer. Any other guess? My dear students, in Bajaj, the whole Bajaj family, Raju Bajaj, Goenka Bajaj, and Sudhir Bajaj, they combinedly only hold 17.38% stake. They are not having more than 17% stake in Bajaj. If you just Google the shareholding of any promoters, they are not having more than 20% of shareholdings. If I talk about the promoter, the promoters are the people who actually promotes the group, who actually supports the group. If I give an idea, just take another example. How much shares the Ambani family? is having in Reliance? Any number idea? It's no harm that you got correct or wrong, but it is exactly same as per your book answer. The total value of Ambani family shares is 50.39%. So they are holding 50.39 shares in Reliance. But if I calculate the only the Ambani family, not its daughters and etc., it is only 39%. Similar way, if I calculate the shareholding of Bajaj family in Bajaj, any guess how much shares they have? The total shareholding of Bajaj is cumulatively. Why I'm saying the word cumulatively? Because the Bajaj group is holding the more and more people because there are total four brothers. The total earning of Bajaj family in one quarter is 14 lakh crores. I repeat, 14 lakh crores in one quarter. So their annual turnover of Bajaj family is around 64 lakh crores. But when I talk to the Bajaj, their ownership is actually what we find is very less. Now, Raju Bajaj is holding only 0.27% of capital. It is not even 1%. As per the rules of SEBI, if I am holding the 4% of shares of any company out of total shares, I can become a board of director. And if I'm going to purchase the shares in open market, then the SEBI talks about if I purchase the percentage of shares of any company, then what is the maximum limit? Suppose I'm having a lot of money. I want to purchase share of Asian Paints. How much shares I can buy in one day? Any guesswork? Any guesswork? I repeat in Marathi. Suppose मला एक कंपनीचे शेअर्स घ्यायचे तर मॅक्सिमम हाऊ मच शेअर्स आय कॅन परचेस व्हॉट इज अ लिमिट देर इज समथिंग कॉल एज टेक ओव्हर अँड मर्जर as per SEBI, like as per your books of sorry, as per the information which is shared, the minimum value if I want to take over any company is 51%. But as per SEBI, I can take over any company if my shareholding is more than 26%. And in a day, the trade volume, if I find the differentiation more than 5% limit, that is total equities are available and more than 5% shares are being traded in one day, then circuit lock is applied. So first is 5%, then second is 7.5%, then the third lock is on 16%. If the SEBI observes the trade is happening more than 16% of any company shares, it immediately lock the trade because it is observed as fishy and creeping takeover. Coming back to our topic, the promoter and their shareholders is very crucial and essential because if these figures are changing, the numbers are changing, this will definitely change the ownership, the structure, and the vision of organization. For example, when the Bajaj was started its journey in two-wheelers, their major focus was on two-wheelers and quadricycles, like three-wheelers. Later on, the Bajaj family is divided into four brothers and one sisters. The one family continue with the two-wheelers legacy, so they continue with the famous Bajaj scooters. After some times, when the competition from motorcycles of Hero Honda started, the Bajaj family has decided to move from traditional scooters to motorcycles and that to be a power motorcycles. So they started a new plant, new theme, and new. Then Raju Bajaj has lead this foundation. The old people they are still in Bajaj family, but because he has lead this vision, and that's why the promoters and their shareholding pattern is a crucial document for every disclosure. If suppose there is Mr. X who is the owner of company, he is holding suppose 70% of shares. Normally, this much percentage is never allowed to a single promoter in case of public limited company. But even suppose they are holding 70% of shares. So in such case, he always has a disclosure. What is the pattern? How much percentage shares he have, and what is the number? Because that person is carrying on succession to his counterpart. Now let's say example what happened in Tata Motors now. Tata companies are governed by one mother body, which is called as the Tata Sons. The Tata Sons has different shareholding. They has a variety of players, variety of industries who are contributing towards growth and functionality of different Tata companies. So there are 14 Parsi business houses which are actively part of Tata Sons. The foundation of Tata Sons was to protect the Parsi operations. It was previously a religious movement what the Tatas has initiated that we all Parsis should come together, form our association, and develop a great base in India. And then they started something called Tata Motors and all others. So every companies here, they are governed by Tata Sons. Now, after death of Tata, there is difference between these organizations. Cyrus Mistry, Poonawalla, and other groups, they have the issues. So they decided the role of each player. And based on this role, based on this holding, the decision making and the operation of company is changing. And that's why for every year, it is essential to disclose the promoters and their shareholding pattern. If suppose this illustration is not there, then what will happen? If suppose this illustration is not given, then in such case, the equity owners they will feel cheated because many times when disclosure is absent, the person who is operating company is not clear. Even we know it, it is not clear. Why? Because it is stated that somebody is holding share, but who is actually operating? Because as a single shareholders, There are large pattern for other players. Now let me show you the Infosys shareholding. Now my simple question, who has started Infosys? Any guess what? Let me just share the screen. I just make a Google search and let you show you the actual context. Yes, somebody was saying something. They
I said
started the Infosys,
Narayan Murthy and his four friends.
four friends. So they started in one flat, then joined by Sudha Murthy, and it become total seven people, and then they just go on. So this is shareholding pattern declaration by Infosys. I just zoom it for your reading purpose. So they are saying whether the listed entity has issued any partly paid up shares. So they say yes, no, and so on. And here what you find the declaration about the same. So in actual, this is a disclosure which is followed about shareholding. I'll wait for 1 minute. Is it readable condition or shall I zoom it more? I'll show you partially by more zoom so that you can read it. So they are divided into a group. The first group they are showing is, I'll zoom it more for more better reading. Yes, now it's visible, I guess. The first part is a promoters group. Promoters group means these are the people who are actually started the idea called Infosys. And how many people the shareholding they have? So number of promoters are 23. And if you just look at the normal, that non-promoters or public shareholding, it is something around 14 lakhs 9,758. So 23 people are the actual owners or actual people who has laid the foundation of Infosys. Now, if you come to the second column, the number of fully paid up equity shares, and I'll just show you the working. Let me share the entire screen. Okay. Now the screen with calculator, I can just show it to you. Yes. Now calculator is visible to you. So what I'm going to do is we have something called 5516823338. So these are the shares which are held by these 23 people. So if I just divide this by 23, each person is holding around 2 lakh 39,000. Sorry, it is 2 crore 39 lakhs 86,189 shares on average. So when I talk about the promoters' contribution, it is more than this. But if I compare the other thing, that general public, let's call it for general public. So it is 3691691,782, and we divide by the number of people holding this 1409758. So what is the answer? Hardly 2600. So if I calculate the holding by general public, it is only in 2600 on average. And that's why the role of promoter is necessary to be shown in balance sheet. Because these 23 people, they are holding something in crores. So number of shares are large with them. They are holding the major power about the shares. So they are something around 55 crores 16 lakhs. If I just move my cursor to the end, their shareholding as a percentage of total shares. So 23 people are having 13% shares of total company. Now, can you guess what is the power of this each person? Whereas the 14,000 people, they has only 87% holding. So who is having major shareholding? The general public or promoter? The simple answer, the promoters. Because if these promoters today decided to oppose something, they can come together in a group. They can influence the company decision and they can discuss what will be the next step a company should follow. They can discuss what are the organization structural changes they can go with. And hence, the statement of promoters shareholding is very crucial. Because here I find the 80% is controlled by a large number of people. So if I find on average the 2600 shares are holded by people, but when I do it for the promoter, it is coming something 2 crore 69 lakh and so on. So the shareholding pattern is not equal. I just calculate the benefits. If I earn 100 rupees, the 23 people out of 100, they will earn the 13 rupees, and the other so many people, that is 14,000 people, they will only earn 87 rupees. So this difference is about promoters. And this difference makes me understand why this declaration of promoter is so crucial. Because if I'm not having this declaration, then in my case, we are simply in trouble because I'm not able to understand the promoter and their shareholdings. So I guess we are clear about what is disclosure and why it is essential. Now we all discussed these things. So just go through this meaning of promoter and what is his role. I'll wait for 1 minute and then we'll move to the next point. If any doubt, you can just post in chat box or you can unmute and ask it. Any doubt? I hope I had discussed the most of the points. But even though if any doubt, they can just put in chat box. Anything you feel I should repeat, I can repeat the same. No doubts. So let me again speak over. The promoters are those people who has promoted or initially launched the company. These people are normally because they has initiated this concept or idea, the major shareholding is lies with them. Their control, their affairs and advice is very vital for decision making. So in any financial statement, it's very important to have the role of promoter disclosed. And also it is very crucial to disclose their shareholding pattern. Now let's talk about the clause F of note 6A. Now what is a clause F? Clause F is an essential part of financial disclosures as per Companies Act 1953 and the Indian Accounting Standard 1, Indian Account Standard 3, and 3BF. As per this clause, if I am the promoter of any company or I am the initial major shareholder of any company, then I need to disclose what the position I am holding because this disclosure will serve the basis to avoid the manipulations and avoid the undue influence in other ways. So these disclosures are crucial to meet the financial transparencies for the non-promoters as well as to retain the trust of general public in company. Because as a promoter, I got a large financial volume, I got a large holdings in a company, and I'm the key resource person to make the decisions. But if I am disclosing what is my percentage, what is nature of holding. It simply gives an idea and confidence that there is a freedom of option. Suppose I want to invest in Taj Group, but I don't know who are the people and what is their holding pattern. I assume that Taj Group is owned by Tata, so 99% shares are with Tata. So I will make a thought, what will happen to my holding? They are having 99%, so it's a simple holding. I simply cannot do anything. So, in that case, the shareholding pattern of Tata is disturbed, and the objective of financial transparency is not there. So, to bring it objectivity, transparency, the clause F denotes the disclosures is financial shareholding is very crucial, and hence, when we talk about any company's shareholding, we need to differentiate between public and its promoters. So let's move on. I'm sorry, it's 7 o'clock. So what we'll do is I'll just revise. Today we just talk about the promoter and his disclosures. We take example of Asian Paints, Reliance, and Infosys. Promoter, he is the person who has promoted something. He has promoted the capital. He has promoted the concept. He has promoted the overall seeding money. So these are the people who has triggered up the major shareholders. This disclosure is essential for financial transparency and regulatory in general organizations. This disclosure talks about their shareholding pattern, their voting rights, and the total contribution in organization. This disclosure is given as a note in financial statement. This note is helps the major shareholders to bring the transparency and understanding. So that's all for today about financial reporting station. Any doubts? I think it's 7 p.m. So time for the common subject session. So you can join the common subject session and you can log out from this meeting. Before you log out, please remember attendance for every session is crucial and monitored. When you join any session, please rename the session properly. Sorry, please rename your names in session properly. If you're writing just show me, read me, or improper names, your attendance is not being recorded. So thank you once again to everybody for being part of this session. And special thanks to Aslisha and one more person because they has contributed. And I expect the same contributions from everybody at 8 p.m. for my session on international finance. Now log out and join the common session.